Hello, thank you for joining us. This is Business Incorporated coming to you live from Lagos. I'm Chimeze Obi Iwagu. Ghana's parliament rejects a key tenet of $980 million aid deal with the International Monetary Fund. And Libya's National Oil Corporation worry that promises to reopen blockaded ports could be broken. And in Kenya, Uber drivers in capital Nairobi go on strike, protest against reduced fares affected by the company. I'll begin in the UK, where a leading economic forecaster says the economy has a 50-50 chance of falling into recession within the next 18 months following the Brexit vote. The National Institute of Economic and Social Research says the country will go through a marked economic slowdown this year and next. According to it, inflation will also pick up, rising to 3% by the end of next year. Overall, the Institute forecasts that the UK economy will probably grow by 1.7% this year, but will expand by just 1% in 2017. Meanwhile, the Bank of England is expected later today to unveil its wide-ranging stimulus package as a bid to stave off a post-Brexit recession. The package is likely to include a further cut in what are already record-low interest rates, as well as a possible new round of money printing.
There are various things they can do. Quantitative easing, putting more money into the economy, actually finding a mechanism to probably provide other assets being purchased, bond purchases and such like, to make sure there is more movement, because the economy at the moment is, on the private side, slowing up. Doesn't mean he's necessarily going to take immediate decisions. What he's going to be showing is he is prepared to take action and probably give us some of the ideas of what he will do. So laying out a path to support the economy, that's what the market will want to hear.
Quite a lot to chew from Europe today. Stocks seesawed in today's trade as investors treaded cautiously amid a slew of earnings and the fall in oil price. Let's cross over to Frankfurt now, where DWTV Channels TV financial correspondent Annette Wisbach is waiting to talk to us about these latest developments there. Good afternoon, Annette. Well, the Bank of England is expected to unveil its wide-ranging stimulus package today. What are the expectations? Will it compare with Bank of Japan's stimulus, which many describe as helicopter money?
Well, the expectations for the Bank of England move are not as high as what we've seen recently from the Bank of Japan. What most likely will happen tomorrow, when the Bank of England will announce its measures for the first time ever, the nation voted for Brexit, for leaving the European Union, is that they will cut the interest rate by 25 basis points. When it comes to further measures like more asset purchases, we are not sure. 50% of economists polled by Bloomberg, for example, are saying that they are not expecting the Bank of England to announce a bold new program. The other 50% are expecting the Bank of England to do so. But what we can expect actually is rather some volatility for the pound tomorrow, so watch out closely what happens to sterling, and also the UK equity markets might be shaken by whatever the Bank of England will announce, essentially. I think most interesting also will be what the inflation report will tell us. It's the first time since Brexit that the Bank of England gives us an update about their assessment of economic activity in the United Kingdom, and that might also reveal to us some more information what might be happening, or what might be the next steps by the central bank in the United Kingdom.
All right, let's look at the development in the zone where you are standing. That's the ECB, in its latest economic bulletin, reported positively about its corporate bond purchasing plan, which it started on June 8, and says the consumer goods companies benefited the most. Talk us through this report.
Yeah, is completely true. The European Central Bank came out with an own assessment of their own program. So, like expected, they are saying that it has positive results on refinancing costs for European corporates. There are two effects. One is the signaling effect, which actually already took place when they announced it back in March. So borrowing costs instantly fell. And then the second effect, which is perhaps even a little bit lower, that when they actually started to buy corporate bonds in the Eurozone. They are not allowed to buy financial company bonds. It's purely industrial, if you want, or consumer related company bonds which they are buying. So the negative side of things, one has to say that they also were buying quite a big chunk of bonds which have negative yields currently, which might settle them in the end with some losses. That's the big concern here when it comes to the ECB corporate bond buying program. And also that like smaller companies, like small and medium-sized enterprises, they will not benefit from that program because they don't have corporate bonds out, which enables them to benefit from the purchase program by the ECB.
Now, Annette, looking behind you there, I can see the DAX tilting downwards, and we've seen more earnings coming in. The latest, of course, is from one of Britain's largest lender, HSBC, and French bank, Société Générale. While HSBC posted a sharp decline in profit, Société Générale is reporting a rise in profit. How are investors digesting these earnings, and is that what is really affecting the DAX there?
Well, actually, what HSBC and also Société Générale have been revealing today to investors does not have a big effect here on the DAX. If you look at financial companies here in Germany, they are trading lower, they are in negative territory, while the others, other banks, which I mentioned in France, but also in the UK, in the Netherlands, they all are trading up quite tremendously. It's sort of a counterintuitive move when we look at HSBC, because the earnings itself, they look really bad. But at the same time, HSBC is doing everything to please investors. They are buying back a huge chunk of their shares. They are pledging to keep their dividend payout ratio stable, which actually gives them one of the highest dividend payout ratios among FTSE 100 companies, and that is helping the shares trading higher. They are up by more than 3%, which is a lot for a bank these days here in Europe. Société Générale, you mentioned, they reported better than expected earnings, and the shares are one of the biggest winners on the French market side, and the same holds true also for ING. ING, the Dutch bank, also reported better than expected earnings, and those shares are surging even more than 7%. But it's not only bright with European banking shares. Looking in Italy, or to Italy again, UniCredit shares once again are falling quite a bit because they came out and informed the market that their capital position has fallen, which is a shock for many investors.
Well, thank you very much, Annette. We will look out for more earnings, and of course our eyes are certainly on the Bank of England. Do enjoy your day. Annette Wisbech, DWTV, Channels TV financial correspondent there at Frankfurt Stock Exchange. Well, moving on to Asia now, Japanese shares traded lower today, continuing a global sell-off on US and European stock markets. Tokyo Nikkei 225 closed 1.9% lower. Investor mood failed to be lifted by Tuesday's large stimulus package as economists doubt it will have much of an impact on the country's sluggish economy. Elsewhere in Asia, markets also took their lead from Wall Street. China's benchmark Shanghai Composite edged 0.2% lower, while in Hong Kong, the Hang Seng fell 1.6%. South Korea's benchmark Kospi dropped 0.9% to wrap trading at 2,000 0.07. In Australia, the ASX 200 fell 14% to close at 5,465.70 points. Well, we'll take a quick break, and then when we come back, we'll look at the development in Kenya. To stay with us.